So with that, now let me call upon Samir. Samir heads our digital business, and he'll present to you a session on the digital becoming a consumer powerhouse. Thank you so much.
Thank you. Abhijit. Hello. 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 Okay. Hi. Good morning, and thanks for being here. Uh, Last year, we introduced the notion of Access 2.0 and how we've set that up as a business within the bank. Access 2.0 is now open by Access. We've rebranded it. We ran a marketing campaign through the World Cup as well. Hopefully, many of you saw it. What I wanted to do today was present to you an update of what has happened over the last year on what we promised to deliver to you last year. So, just as a quick recap, Open by Access is set up as a business unit, which means there's something we call fully digital business. I'll describe what that is. That is run as a kind of a vertical. And secondly, when we set up Open by Access, we said one of the key reasons why we will succeed in this market is because we'll build strong proprietary in-house capabilities. Today, I wanted to provide an update on both. So, first, just a broad perspective of how digital has evolved in the bank. So, there are lots of metrics here. I'll not read through all of them. But basically, if you look at the last 4 years, between December 2019 and let's say October 2023, across different types of metrics, whether it is customer experience, so as an example, our app rating, or it is the usage of our digital channels, the let's say monthly active users of mobile app, uh, financial transactions, service requests, or sales. Across each of these, we've seen very strong growth in the last 4 years. Numbers here are indexed. Many of the numbers are indexed. Some of them are not, but many of them are indexed, and you will see that they are all, between 2 to 6x, sometimes even more of what we used to do 4 years back. So we've seen good growth come through and good adoption come through in the digital space. Also, what has changed significantly is the capability set, right? So whether it is the team size that is looking at digital, or it is the number of APIs that we have, or it is our operating model, or it is the design capabilities that we built, we made some fairly fundamental shifts in the last 4 years, and that's what we wanted to represent here. So moving on, uh, this is a recap page on what is open by access, and what does it mean when we say that we have a business which looks at digital. So again, to exemplify, I'm taking the personal loan example here. Personal loans happen in the bank in three ways. The first one is where the sourcing is physical, which means a salesperson comes to the customer and pitches the product to the customer, and the processing is also physical, which means once the customer agrees, the salesperson takes out their tab, does some data entry, takes some images of the documents, sends it to a credit manager at the back end. Credit manager does some credit analysis, and then some ops team disburses the loan into the customer's account. So here the sale was physical, the processing was physical. This is the first kind of way in which in the loan happens. The second way is where the sale is physical, but the processing is digital. So the salesperson comes to the customer, pitches the product. Once the customer says, "I am interested," the salesperson will say, "So why don't you open your app and click 4 buttons, provide us some information." The moment those 4 buttons are pressed and the information is provided, the money is disbursed into the customer's account. So there was no credit manager, there was no ops manager, there is no document, and so on and so forth. So this is what we call assisted in our language. This is number two. The third mode is where there is no salesperson. So the sale is also digital. The customer, kind of discovers the loan on their own. Either they go to our app and see an offer, or we run a digital marketing campaign and kind of they see it, and then they go to the app and disburse the loan on their own. So here there is no human being involved in the entire journey, neither in sales nor in processing. And this is what we call open by access. All right. Now this I have taken a personal loan example to exemplify, but this principle applies across all kind of products. So open by access is what, when we say digital business, this is what we refer to. It's a very sharp definition of digital. We do not include as an example assisted here. Assisted business is counted in elsewhere. Now in the case of personal loans, in first half of this year, 23% of disbursals that happened at the bank level happened via open by access. So already at reasonable scale, 23% is not bad at all. And that number, by the way, compared to last year, grew by 59%. And this obviously is faster than what's happening either in the assisted or in the physical world. And so what we are seeing is, kind of the share of open by access grow in the business. And we had kind of presented these numbers last year as well. So if you go and see the contribution has also increased over time. So this is a quick recap of what open by access means. We'd laid out our strategy, our 5-year strategy last year we shared with all of you. And so again, a quick recap of that. We made four kind of, we laid out 4 aspirations. First was to just set up open by access, which means we had to set out the team, we had to build the products, we had to go out and market them, we had to internally work on creating the P&L balance sheet, etc. This is, I would say, 70-80% done. There's a little bit more to do, but broadly in place. The second aspiration we'd set out was that we wanted to acquire customers at scale. Third, we wanted to grow our business and particularly become a digital consumer lending powerhouse. And the last one we said was that we want to be a benchmark digital bank globally. And under that, we'd said that, as an example, we want to be a top 5 rated mobile banking app. We want to be known globally for our people, our tech, our processes. So these were some aspirations that we'd set out. This is just as a recap from last year, just to provide the context for the rest of the presentation. So moving on, what has happened? So we made some reasonable progress across both the top line metrics, which is business, as well as capabilities, and that's what we will cover in the subsequent pages. So the first update is Axis 2.0 is now open by Axis. We've rebranded this entity. It's now a customer-facing name. Our mobile app, as an example, will show up as open now if you go to the App Store. And we are running there is some branding and marketing we are doing around it. We'll continue to do this, and we intend to establish this as a consumer brand representing the bank. Moving on business. So Amitabh shared this, but we made good progress on overall business. So on the deposits front, our deposit balances, these are balances. So balances grew by 53% in H1. And similarly, loans outstanding grew by 77% in H1. These are now at kind of reasonable scale. Both are 5-digit crores in terms of absolute numbers. So these are not small. These are not kind of, obviously they are in the scheme of the bank, they are still small, but these are not small numbers. We are talking of 5-digit crore numbers here, which have grown at this pace. The second point is that open by access, it has grown well, it is at scale, but it also continues to be accretive to bank level economics. And again, I take to start with the personal loan example here. So 23% of personal loans disbursed were open, including assisted, it was 57%. This is by volume, this is by value, by the way, which means it's rupees crores. By volumes, which is number of loans, this 57% is upwards of 80%. This business that is happening through digital comes at 150 basis points plus higher yield. So the yield is much better. It comes at better fees as well, 50 basis points higher fees. And obviously the OPEX of doing this is approximately 46% lower. Open by access, largest business growing fast and is accretive to the bank economics. This was the PL example, but if we kind of look across, and we've taken some examples here, example products here. If you look at products across, we will find both that the NPS, which is the Net Promoter Score or the customer satisfaction, is at par or better compared to the physical alternative. And there is a OPEX delta that we see when we do these products. So we are getting the kind of OPEX benefits flow through, and we are getting better customer experience benefits flow through as well. So again, kind of stepping back, open by access, largest business growing fast and accretive to bank economics. We continue to be, so one of the things we said last year was our mobile app is rated 4.8 on the Google Play Store. We have now 23 lakh reviews. We continue to be the highest rated mobile banking app in the world. We've now looked at the top 500 banks by market cap across the world, and we looked at ratings of these. We continue to be kind of rated 1. It's something that has worked well for us. And we have now 13 million monthly active users on our mobile app. When we had presented last year, this number was around 10.9, so closer to 11 million. We now have 13 million monthly active users on our mobile app. And on average, an active user comes to our app 15 times a month. So it's a large base. It's also a highly engaged base. They are kind of interacting with us very regularly. Last year, this year Abhijit has given me much lesser time than last year, so I don't have kind of all the demos and so on and so forth. But what I wanted to do was to show that last year we had demonstrated to you products across each of these buckets, right? So liability products we'd shown savings account, origination, FD, etc. Lending products we'd shown some personal loan journeys, business loan journeys, etc. Cards we'd shown our portfolio products like EMI, convert to EMI or instant loan on credit card, etc. Investments we had mutual funds, FRSP, SGB, digital gold, and so on and so forth. And finally, services, which is how customers engage with the bank for whatever request they have. These were launched by last year. What we've done this year is these products that were launched last year have deepened and they've scaled quite significantly. So we worked very hard on growing them quite dramatically. So these are some numbers. As an example, CASA balances have grown 58%, FD has grown 54%, lending has grown by 77%. Cards portfolio has grown 6x compared to last year. What we did this year versus last year was 6x. Mutual funds fee has grown quite well, servicing has grown quite well. So whatever we launched last year, we've worked on deepening and getting scale and benefits out of that this year. In addition, across each of these categories, we made new launches. So some examples that I'll take you through. But to kind of summarize this, on the liability front, last year we'd focused on acquisition journeys. So savings account acquisition, current account acquisition, FD opening, etc. This year, we added some acquisition journeys, but we focused a lot on engagement and deepening initiatives like bill pay. Was an area that we weren't doing that well in. We've launched it. We've seen some good, very good progress there. OneView I'll demo, which is we were the first bank to launch this. On our mobile app, you can see all your balances across all banks in the country. So we launched that. On lending, we launched partnership loans, and then we moved to now secured loans. So last year, mostly we were working on unsecured loans. We had some versions of secured that we'd worked on. But this year, as an example, we've launched a digital Kisan credit card. We've launched Midas, working with the gold loan product, working with Munish and team. We're working on home loans and so on and so forth. On cards, we've added a few things around add-on cards, benefit dashboards, and so on and so forth. Investments, last year again, we worked a lot on new acquisition journeys. This year, we worked on building some investment insights for customers. So we have something called a PFM, a personal finance manager. Again, demo it, but it's something that helps customers understand where they are in their financial life and how do they improve it. And on services, we've added different types of services. So what have we done in the last year? Whatever we launched earlier, we've deepened, we've scaled them, we've ensured that we see growth coming through and benefits flow through the bank. And this year, we've added new features, new functionalities, so that next year we can kind of take benefit out of these. So that's a little bit off on the launch side. What I thought we will do is take 2 or 3 of these features, important ones, and just demonstrate that to you. Also, outside in the break, we have some kiosks where you can go through many of these in more detail. So the first one I just wanted to flash was our app. On the left is what you see, the landing page of our erstwhile app. And on the right, you see our landing page of the new app. It's a fairly major upgrade we've done. So one, obviously the look and feel. It looks much more new age and fresh and so on and so forth. But also our new app is hyper personalized. So, and I think Balaji will speak about this subsequently, but on the landing page of our app, customers see an offer which is only for them. And it is very specific. As an example, one of you may see that you have a personal loan offer of 5 lakh rupees at 10.5%. Very specific to you, right? We are not saying starting 5 lakh and starting 10.5. It is very specific to you. Another customer may see 3 lakh at 11.5 because that is the offer for them. A third customer may see something saying that your KYC is due and please now update it. A fourth person may see something else. So hyper personalized to an individual. This is not segment level personalization. That is what we've built. And the other thing we've done is that 85% of stuff that customers do on the app comes on the landing page. So customers come to most use cases in our app are to check the balance or to check their credit card outstanding or to check something else. All of this is in the landing page now. The second use case is to make a transaction, so send money. Again, it's there on the landing page, and then there are a few other small things which all of them come there. So from a customer perspective, these are all one-click journeys. Just log in and kind of do whatever you come to do. Also has helped us improve our experience quite a bit. Rating has jumped quite dramatically actually by 2 points since we made the change to our app. There are two other things I want to demo. The first one is the OneView on the left and PFM on the right. OneView is we are leveraging the account aggregator ecosystem to enable customers to see all their bank accounts in one place. So I'll just run this demo, and as it kind of plays, I'll also speak about it. So on the left, you can see the landing page of our app. What we are showing here is the onboarding journey. There was a link saying add new accounts, on which the customer is asked to kind of add an OTP. Here the customer has an ICICI bank account, so it chooses ICICI. All accounts are displayed. He's choosing both accounts to be linked. We ask an OTP. The OTP is done. Customer asks to link the account, enters the PIN, and it's done. So now the customer can see the Axis Bank account and the ICICI Bank account as well. And also, it was a little fast, but at the end, when the customer clicked on the ICICI Bank account, he could see all the transactions that were done in the ICICI Bank account. So it's very powerful, the ability of managing all bank accounts that you have through one app, which is our app, is what we've launched. We've seen very good traction here in terms of number of customers who are adopting this. The second one I want to demo was the PFM, which is on the right. So let me just play that as well. So PFM is called My Money from the landing page. Kind of the customer chooses that. So the first thing the customer sees is a single view of all investments that was at the top across all instruments. The second thing the customer sees is their spends across. The spends are categorized by payments, fuel, restaurants, etc. They can see a 6-month trend. There are some insights we also throw. As an example, we say that this month your spend on food is 5% higher than last month, and so do you want to do something about it? So there is things of that nature. The third thing that the customer saw that was their credit score. So they can see their credit score. They can also see the top 3 reasons what are impacting their credit score and how they can improve it. So even that analytics is provided to them. And the last thing there was insurance coverage. So across investments, spends, credit, and insurance, this is a tool that is providing some insights to customers on how they can improve their financial life. Again, we've seen great adoption here since we launched it. There are some tweaks we are making, and we are hopeful that this will deliver significantly better engagement with customers and also help us cross-sell other products, as an example, investment products through this module. The third thing I wanted to speak about was partnerships. We've been speaking about partnerships, but now I think, as Amitabh mentioned, partnerships is our framework is now fully ready and it's at scale. And what that includes underwriting. So we are able now to work with partners to do real-time underwriting. We have multiple underwriting models depending on different type of data, different type of customers, different type of partners, and these are all partner ready, right? So API-led and so on and so forth. We built a tech stack that is ready for partners, and this tech stack ready for partners is across products. So credit cards we've been doing for many years. That is kind of very well established. Earlier this year we launched personal loans with 2 partners, but then we should launch many more partners in the next 4-5 years. We have some other products like current accounts, savings accounts, etc. as well. So the tech stack for partnerships is ready. It is tested, and for many products it's at scale. It's at real scale, and this is something we believe differentiates us compared with many of our peers. And for some products, we believe that we have something that is market leading in terms of the tech offering. And the last kind of element of the partnership model is actually how we've organized ourselves. So we have a partnerships team run by Sanjeev. Sanjeev is in the room, and that team takes a pan bank view, right? So it's not a product team. They are not going and pitching credit cards or PL or X or Y or Z. They take a holistic view across the bank, including, by the way, corporate banking relationships like nodal accounts, corporate salary, and so on and so forth. And they are the one point end-to-end relationship managers. And so they help us bring the bank together and have much more deeper conversations with partners, which are not just transactional. So that's the third element that helps our partnerships. Instead of me speaking about partners, we thought we will get our partners to talk to you. So we have a short video which I'll just play.
When we launched as Stays in 2017, UPI clocked 17 million transactions per month in the country. Today, as an ecosystem, we cross approximately 10 billion transactions in UPI per month. A lot has evolved over the last few years. What has stayed constant for us is our partnership with Axis Bank. Whether it was enabling consumer payments through UPI across the length and breadth of the country as our PSP bank, or serving small, medium merchants, enabling them to accept digital transactions even during the pandemic. We've been proud partners to Axis in this journey. As we look to the future, we're very excited about Digital Pragati Mission. And we're looking forward to build on our partnership with Axis to provide responsible credit and serve Indians. What's special about this partnership? It's the human connect. As we work with Axis every day, the teams are a pleasure and a privilege to collaborate with. And it's the impact that we're able to bring together.
Hi everyone, I'd love to share our experience working and collaborating with Axis Bank over the last few years. Firstly, Axis Bank has a great team which is very partnership oriented, which is a very execution focused organization. The DNA of the bank, because it's an execution oriented, just helps us move really fast. There's willingness to innovate on products, on processes, and to then goal to improve customers' experience. Partnering with Axis Bank means for us, investing in a relationship with a bank which is very large, which is very trusted, and can build products and systems at scale. The bank has greatly transformed its infrastructure to meet the ever-evolving needs of the digital ecosystem. Axis has wide variety of products for a platform like PhonePe to leverage. The partnership also is unique in a way where Axis Bank, we leverage Axis Bank's great understanding of banking, and Axis Bank is able to leverage our distribution, our tech product prowess in a way where we jointly create a great customer experience. We're really excited about working with Axis Bank in the years to come. Thank you.
Our mission at Flipkart is to provide our customers with a seamless, convenient, and affordable shopping experience. We believe that when we design financial services and payments for over 500 million customers, we design for Bharat. We are deeply appreciative of the partnership with Axis Bank that is making this mission possible. Our co-brand is now over 4 million strong. Earlier this year, we launched personal loans with Axis Bank, and most recently, Axis Bank was our partner at our marquee event, Big Billion Days. I would like to thank the Axis Bank team for being an integral part of our success. I wish Axis Bank the best and look forward to scaling this partnership to new heights.
Hello everyone, my name is Mayank Jain and I'm a director at Amazon Pay's India and Emerging Markets team. I lead our digital lending and co-branded credit programs, which serve millions of our customers and small business partners. I think I've been working with the Axis Bank team in one way or the other for more than a decade now, starting with my time at the Boston Consulting Group and now at Amazon. And for me, a partnership with Axis Bank is really a chance to work with my old friends and colleagues. I think what differentiates Axis Bank's partnership with Amazon is the sense of camaraderie that we have, of course, and also a long-term focus that both teams bring to solve real customer needs. We are looking forward to co-create new products that help our customers and business partners fulfill their aspirations. Thank you.
Delighted to have partnered with Axis Bank and introduced an exclusive Samsung Axis Bank co-branded credit card with a strong proposition that makes technology accessible to every consumer. This card has a slew of industry-leading features that bring unmatched value to Samsung and Axis Bank customers, such as exceptional cashback offers across the full range of Samsung products and services, including mobile devices, accessories, wearables, tablets and laptops, device insurance services, televisions, and home appliances.
Great. So the idea was just to kind of get some of our partners to come and talk about what we are doing with them. As Amitabh mentioned, you will see that these are all marquee names, right? So we had there Google Pay, Amazon, Flipkart, and PhonePe, and Samsung. And then there are other partners who unfortunately couldn't get ready in time. But then that should hopefully give you a sense of the type of people we are working with. And all of these partnerships are multi-product, right? They may have spoken about one or two UPI. Somebody must have spoken about UPI. Somebody spoke about credit card, etc. But all of these partners are multi-product, and we will add more products with them through this year as well. And many of these you will see as kind of we go through. So again, kind of taking a quick step back, Open by Axis, reasonably large business, growing fast, accretive to economics. Last year we've done a few additional things compared to what we've done earlier. Partnerships is a area of growth and area of focus for us. Now, this was a little bit on the outcome side, what has been achieved. I also wanted to take the last 5-10 minutes just to talk about capabilities. And one of the reasons we believe, and this is an early call we took, one of the reasons we believe that we think that institutions will need to do to win in the digital space is to build proprietary capabilities. If you do not have proprietary capabilities, there is not so much reason for you to have a competitive advantage, right? And for us, capabilities come under 4 buckets. The team that we have, engineering, design, and data and analytics. Data, my colleague Balaji will cover subsequently. I'll focus on the first 3. So first on the team, we have a reasonably large team that is focused on the digital agenda. Across the bank, there are more than 1,700 people today whose day job is basically to further the digital agenda. Just the digital team itself, which is my team itself, is today approximately 800 folks. And this includes, by the way, 350 folks in engineering. So we built our own engineering team. A lot of the technology and a lot of the stuff that we showed you is built in-house, is built by our team. Right? And that helps us bring in the agility and ability to make quick changes and also have some proprietary capability, which is not available with some vendor outside, right? So we have a largest engineering team, which has grown, by the way, between FY22 to FY24. We have a strong design team. Design is one of the centerpieces of our capability. I have more actually to talk about design. Everything that you saw, all the screens, all the demos that I showed you, these are designed by our design team. It's all in-house. And we build some institutional capabilities around design as well. And also we have a very strong product team. This is the team that takes a business lens, thinks about the customer journey, thinks about, where does revenue come from, how do we do digital marketing, and so on and so forth. So strong team, which we have invested further in the last year. On engineering and tech, we spoke about the engineering team. Our engineering principles are based on we have 4 principles that we use, which are for engineering. First is continuous integration, continuous deployment. We are operating in an agile type of a manner, and so agile is the second principle. Third is microservices based architecture. We build stuff once, use it multiple times versus building monoliths. And we've set up our DevSecOps pipeline so that the entire software development lifecycle is automated. We've spoken about this last time, so I'll not dwell much time on it. But our engineering capability has progressed further. So on all of the elements, whether it is the number of releases, number of apps, the kind of API requests that are hitting our services, or the monthly deployments that are happening without minimum downtime, we've seen significant growth across all of these. And so on engineering and technology, again, last year we built a foundation. We have deepened that foundation further. On design, last year we'd shown a demo of Subzero. Subzero is our design system. It is an open system. You can actually check it out, subzero.axisbank.com. Every, this is an atomic design system, right? Which means that it starts at the pixel level and goes up to the screen. Everything is predefined. So as an example, if you are a designer and you want to add a button to your app, what the size of that button is, what's the color, are the edges rounded or are they sharp, what is the font size, how does the secondary button look like, what does the primary button look like, everything is defined. As a designer, you don't need to break your head. And the code for this is also there. So as a developer, you don't need to write code, you just kind of go there and copy and kind of paste it into your code, right? And this is all open architecture. You can all go and check it out. What we've done this year is we've added to this library. So last year we had 50 components, today we have 84 components. There are many more inserts we are making, and we are using this in a much more, I would say much broader way. Many more journeys are designed using Subzero now versus what was there last year. The other thing I wanted to show you, so the second capability that we've introduced this year is what we call Accord. So Subzero was our design system, Accord is our illustration system. And what illustrations does is basically we've defined some of these characters and some graphics, etc. So let's say if you want to make a image or if you want to make a video, again, people don't need to start from scratch. Stuff exists, you just reuse them. There are 6 characters, each character has a story and background and so on and so forth. Bring those together. And by the way, over time, consumers get used to these characters, right? So for consumers also there is kind of consistency and continuity. So instead of talking about this, I wanted to show you a video on how Accord is used to create something. This is a video of the team wants to create a banner for home loans, which they want to put it into our mobile app. So how do they do that, right? Something like that. All of these elements are defined in Accord, right? The font of the text, the kind of the imagery that you see in the background, some characters will come. These are all coming from a existing system. So yeah. So this is a kind of, obviously it was a little bit mock demo, but this is how something like this will get created. And because this is being done in-house, because this is being done using established standards, the time for us to do something like this is significantly lesser than what we would have taken us otherwise. So I'll not speak. The last capability that we've added in the last year, we now have a design research lab. Again, design is a central part of our capability toolkit, and hence design research is something that we've added to. What we've done here is we do UI research or UX research. We've now done it with like more than 1,200 participants, more than 50 hours, more than 50 UX audits have been done, including our team goes out in the field every month, twice to kind of speak to people, etc. We are also building a in-house research lab, which will, what you see here is a heat map. A heat map is a way for the designers to understand how customers interact. So the areas which are deep red are the ones where customers have clicked a lot, and the areas which are progressively lesser, kind of lighter, are the areas where customers have not clicked that much, right? Now this helps them understand how customers are interacting with the screen that is put in front of them. We also have something for eyeball tracking, similar stuff, like when customers see a screen, where do their eyeballs go directly, which part of the screen, and how do they kind of explore. So this is still kind of, the lab itself is work in progress. I think we should have it in the next couple of months, but we are investing in building a lab inside where we will continue to do this research on the UI UX. So again, now kind of to just bring everything to closure and to summarize again on overall on Open by Axis, very sharp definition of what digital means and what open business means. Large business growing at scale, accredited to bank economics. We've done a few things last year to add new features, etc. Partnerships is a core area of focus, and we built a good stack there. We've done significant investments in building proprietary in-house capabilities across the team, across technology, across design, and data, which I am not covering here, but Balaji will subsequently cover. So that was a quick summary. I just wanted to bring this one section from our last year's presentation back again, which is what does it take to win in the digital space. So our digital capability stack starts with people, and you need a wide variety of people, right? You need people in design, you need people in business, you need people in technology, you need people in product, you need people in assurance functions. These are very different types of people with very different motivations, very different backgrounds, very different outlooks to life. These people need to come together, and you need to hire them, but they need to all come together and operate as a team. So that's the first component. The next component is that using these people, we have to build some of the building blocks. So we need to have the design systems. We need to have Sub-Zero. We need to have Accord. We need to have Agile. We need to have the DevSecOps pipeline. We need to have QA automation. We have to have CI/CD as a framework. So we need to build those. Once we build those, we need to build the microservices so that we can kind of use those. So we have to have authorization, KYC, underwriting, pricing, and so on and so forth. Once we have the microservices, we have to integrate those into our channels. And those channels could be bank channels, like our mobile app, internet banking. It could be partner channels, like some of the partners that we've spoken to. Once you've done that, we have to do sales, because kind of product doesn't sell itself. So, we have to have digital marketing campaigns. We have to figure out how do we, kind of activate our channels, how do we do audience building, etc. And most importantly, we need to have the right governance around it. So we need to have the risk, compliance, cyber security element also placed into it. So it takes all of this and all of this together in a cohesive manner to build a good digital stack and to build something that is compelling in the marketplace. And our attempt over the last 2-3 years has been to kind of, put this Tetris block together. We believe we made some reasonable progress, and we believe that is what will stand us good stead in the long run when we talk of competitive landscape. So that's a little bit about the digital capability stack. Just to kind of conclude what's next. So we have 5 priorities we are working on. First, obviously, is to continue to scale. Amitabh spoke about how we want to be 3 to 5x from where we are today, or where we were in FY22. So that's a big part of the agenda. Liability acquisition is a big part of the agenda. This is just CASA acquisition is something where we believe we need to do far more than what we've done. And so that's a big part of our agenda. Partnerships, we made a very good start, but we need to introduce new partners and we need to broaden existing partners. So that's third agenda. Fourth, we've done well on the app, but we believe the journey is just begun. It's kind of by no means we can declare victory. And so our next aspiration is to move our app from being a transaction app to being a financial thought partner to our customers. So there's a bunch of stuff we are doing there. And the last and the most important is to continue to build new and deepen existing capabilities in the digital space. So that's all I had. Thank you for your time, and hopefully, Abhijit, I'm giving you some time back.
So we'll do a bit of Q&A.
Yeah.
Yeah, go ahead. Rikin, go ahead. Yeah.
Servicing is clear, but on the liability side, how has the experience been? And I'm not talking about the deposit acquisition in terms of number of accounts, but in terms of the quantum of deposits, because what we hear from some other larger peers is that account opening is relatively easier, but getting the deposits is a bit tougher. Do you share the same experience, and what would your thoughts be here?
Yeah, so we'd covered this last year also. See, from the very beginning, we've been very clear that we want to get the right quality of accounts and not chase just number of accounts. And so if you kind of look at various and now we are talking about savings account, right? So if you look at various savings account propositions in the market, ours is not a zero balance, zero minimum funding type of a proposition. To open an account with Axis Bank digitally, you have to pay 500 rupees as fee. You'll have to pay at least 5,000 rupees as an initial funding, and you'll have to maintain 12,000 rupees minimum balance in your account. What that has meant is that our acquisition numbers are not to the levels that some of our other peers can claim. But just to kind of put some numbers out, and we shared this last year, our average balance of a savings account opened fully digitally, right, opened by Axis. Our average balance of a savings account last year was 22,000 rupees. We've not disclosed the number this year, but this year it's higher. It's actually like reasonably high, like significantly higher, because we continue to kind of push on the quality agenda. So you're right that there is a trade-off between doing zero balance accounts and getting millions of accounts, and doing kind of more traditional accounts and getting lesser. We have veered more towards the quality of accounts.
Thanks.
Rati, I think you had raised your hand. Yeah, please go ahead.
Hello, this is Rati Pandit from Nirmal Bang Institutional Equities. I have two questions. You have spoken about the liability acquisition part through the customers who are onboarded on the app. So, little bit, if you could elaborate more on the asset side, what opportunities you are seeing in terms of cross selling. I also saw some slides in terms of fee income. Where it is 50 basis points higher. So that is my first question. And second question is, in case of the loans sourced and processed digitally, how is the asset quality shaping up both on the secured and the unsecured side? And any credit, what the credit quality filters that are in place? Collections, what are the steps from 0 to 90 DPD and beyond? And whether there is any physical intervention required in case of a default? Yeah.
Sure. So on loans, actually, we do very large amount of loans fully digitally. As kind of in one of the pages I had shown, 23% of personal loans, as an example, is originated digitally. Other loans, which is if you take business loans, OD/FD, loan against mutual funds, loan against securities, about 17-18% is done fully digitally, 100% end to end, right, without a salesperson. And by the way, this, like last year, this has grown the book has grown 77%. We believe the book will continue to grow because there are enough and more opportunities. So that's on just the opportunities. In terms of your second question was credit quality, if I
Yeah, the credit filters that are in place, and whether any physical intervention is required in case of a default.
Yeah. So as we speak, the credit quality is basically at par. Meaning if you look at the risk numbers, they are not very different from what we see on the physical side. And this has been the experience now for, like, this product has been around for 2-3 years now. That has been the experience. We obviously have to continue to see this through a cycle. It has to go through a cycle for us to be fully confident. But as we speak, if you look at any of the numbers, 30 plus, 3M 30 plus, or whatever else, they are not looking very different. The underwriting models and filters are also not that different. In fact, our underwriting criteria on digital are slightly more stringent, because in physical there is an opportunity to speak to the customer, and so there are certain relaxations that are available in the physical world which are not available in the digital world. In terms of collections, the collections actually is basically the same. So the moment a loan goes 1 DPD, then it doesn't matter whether the loan was originated digitally or physically. So it all goes to the same channel, and it goes to the same treatment, which is there'll be a little bit of digital collections through SMS and so on and so forth. There'll be telecalling, then there'll be in person, and it'll kind of go on in that fashion.
Okay.
And one clarity is that, our digital loans are like our personal loans. Again, I'm taking that as an example, but just to kind of exemplify, our ticket size is 3.5 lakhs, which is not very different from what happens in the physical world. So we don't do the 50,000 rupee type of loan. That's kind of not the area of focus for us.
Okay, that's it from my side.
Last question, we can take one. Okay, go ahead, Kunal.
Yeah. So with respect to cost, if we look at it in terms of the delta on the growth, that's primarily coming from digital technology and other growth related expenses. So where are we in terms of the investments? And in the opening remarks also for Amita, we had not seen much on the or not heard much about the cost efficiencies this time. So what's the outlook out there? Are we maybe looking at the first half numbers in terms of the cost ratios? They were quite elevated. So are we on track to achieve that? Or maybe we would see that more towards the end of the quarter wherein we had laid out exit quarter, we will see a particular number. So would it be more back-ended, and how digital and technology investments would really, when will we see the benefits of that getting reflected?
Kunal, thanks for the question. I think a couple of points. One is all digital investments have an investment case, and the investment case is listed independently. So all of investments that you're seeing Samir is making make commercial sense and will deliver value. I just want to leave that assurance behind. To your question on qualitative comments on costs particularly, I think the way we are thinking about expenses is, look, the current environment and our return ratios allow us to invest. We believe that this is the right time to continue to invest in the franchise because we are investing for the longer period. You heard Amitabh say we're building this franchise for the long run, not for the next quarter, not for the next year. So as long as the environment allows us to continue to invest, we will continue to invest in the franchise. I think the last point you raised was the outlook on expenses. I think, look, we are running at an elevated level to what we said we would. The environment permits us, our return ratios permit us, and that's how we will look to manage costs.
Sure, thank you.
A very short one, Piran, just few seconds, fast.
Okay, no, I'm curious to understand why would the digital and semi-digital yields be 150 bips higher than normal and processing fee be 50 bips higher?
Yeah, so there are a couple of reasons. Reason number one is in the physical world there is scope for negotiation. So kind of the sales hierarchy has some leeway to pass on discounts and so on and so forth. In the digital world, what you get is what you see, right? So there is no scope for negotiation. So that's reason number one. Number two is that on digital, digital allows us to underwrite more granularly. So as an example, if we were to go to Infosys as a company, I'm just taking a name, right? In the physical world, we will have to have one rate for all employees. It is just very difficult to kind of go and tell X and Y that your rates are different. But in the digital world, when they come and apply to us, they may have different bureau scores, they may have different other parameters, and they may see different yields. And the combination of this typically results in a higher yield.
But the physical guys are also your own liability customers, right? So you
Yes.
have their information anyway. So
it is less of an information, more of a how does loan happen in the physical world? The guy goes to the customer and says, typically people like you will get this rate, and if these things matter, then I think you will get this much loan. Now give me your documents. He will take that, he will send it to the manager. After 2 days, some sanction will come, etc. In this, it's very difficult to have the rate conversation later, right? So the sales behavior is that we have to have some, it is not hard committed, but some soft.
It just demonstrates you can get more.
Yeah.
So I think it just proves that point that if you reduce the flexibility in the system, it is possible at that scale to get more. And the idea is we'll obviously using this to tell the physical world that we need more. So we'll move towards it, yes. But we also are running a project internally where we want to price every customer differently, and that we can do much better in digital than the physical world. So that allows us to do that.
Thank you.
Okay, thank you, Samir. So with that, we end the digital session. We'll move to the next session.